The following is a presentation of TFNN. It is now time for the Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the September 19th. Fantastic Friday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. It's absolutely fantastic to be with you here this morning. Hope everyone had a terrific Thursday. Let's make sure that you and I, that we do all that we can do to have a fantastic Friday and, of course, a fantastic weekend. Now, of course, the best way that we can start off our day is to always remember that each of us is born with a special talent. And you and I, we find our greatest happiness when we use it. So I say use your special talent each day. Each day, use that special talent, folks, and guess what? Life will be extraordinary. And I say that is something to think about. Now, for the next hour, I'll use what I consider to be one of my special talents, and that's taking a look at extraordinary tools that help us identify where the markets are headed to. We'll utilize that lightning bolt pattern, that A to B equals CD. We'll take a look at Fibonacci expansions and contractions. We'll take a look at Japanese candlesticks, peaks and troughs, our TAS market profiles, our Rhodes momentum trading signals, each of which can help us identify what the market is doing out there. Of course, you've got some special talents. You've got some things that you look at on your stock charts, and that means that we want to hear from you. Or maybe you've got a question. The easiest way to do that is to pick up that phone, dial us at 877-927-6648. Internationally, that number is 727-445-1044. Together, you and I, we can go hunting for bulls and bears. It is Fantastic Friday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got Dow futures. They're trading up 68 points, trading out at 17,246. S&P futures up about 6, trade at 2,010. Russell up about 6, trade at 1161. NASDAQ up almost 14 points, trade at 4110. King dollar on the move, up 16 cents, trading out at 84.59. We got movement in the currency market for sure. We'll take a look at that. Goldilocks back $3 right now, 12.24. Silver down 9 pennies at 18.42. Light sweet crude trading down 38 cents at 92.69. A quick peek across the globe. Let's go see what kind of party they're having over in Europe this morning, and not much of a party at all. The FTSE up 45 points, about 0.6%. The DAX is up 25 points. That's trading out at 98.23 in Asia last night. They did have a party. Nikkei finishing up 254 points, 1 0.6%. Closed out at 16,321. Hang Seng up 137 at 24,306. And the Shanghai up about 0.6%, up 14 points. It closed at 24.38. Everybody thinks it's all about Alibaba. Isn't that the case? And so many folks out there have been saying that Alibaba will ring the bell at the top. Are you one that believes that too? Are you one that believes that when we have these big IPOs that they ring the bell at the top? Have you heard that somewhere? Well, Stevie here says, hey, let's go take a tour of a weekly chart. I'm going to put the weekly chart up just simply because it's a little bit easier to go ahead and take a look at. And I'm going to show you, we're going to take a look at what are basically the top 15 IPOs worldwide. Most on our markets, but not all on our markets out here. And so IPO was the most recent one. That brought in $16 billion out there. That took place on May 18th, 2012. And what we can see here is that the Facebook IPO actually marked a bottom. Now, to the day, of course not. But within days, within weeks, Facebook marked a bottom. That was as touted as much as this Alibaba IPO, at least in my opinion, as anything else out there. How about the one before that? If you're just listening on your radio or your mobile device at TFNN.mobi, thanks so much for doing that. Remember, you can get live stream of the show by going to the homepage at TFNN.com. Upper right-hand side, you'll see a button, 3 little smartphone-type devices. Click on that. This show will stream live, and, of course, you can catch the archive on Channel 9. But even better than that, you can join us in our Tiger's Den right now. The easy way to do that is just simply get over to the homepage at TFNN.com, sign up for our Tiger virtual trading competition. You want to do that, that'll give you free access into the Tiger's Den. You do that, it takes you a good minute or so. That contest, cutoff is next Thursday at noontime, September 25th. And look, folks, there are so many prizes. This is something you want to sign up for. Now, let's go back to the chart out here. General Motors IPO, November 19th, 2010. Hey, we had a bottom that came in the market shortly after that. How about the Agricultural Bank of China? $19.2 billion. That was in July of 2010. Seems like it marked, it also went ahead with a little bottom in our marketplace out there. Kind of interesting. These are fairly large IPOs, are they not? They most certainly are. Hey, how about Visa? Now, Visa, that IPO came down on March 18, 2008. Saw a little bit of a rally. In fact, we know we had made a market top back in 2007 out there. Visa, nonetheless, came out in March of 2008. Did that call a market top? No, it didn't. What did call a market top? Well, actually, Blackstone. The Blackstone IPO in June of 2007, June 21st, 2007. Hey, that wasn't the market top. The market top came back in. And this is the S&P that we're looking at, by the way. Of course, most of these were on the New York Stock Exchange if they were in the U.S. market, just like Alibaba. And if we take a look at the high inside the S&P, well, that took place in October of 2007. The Bank of China was busy issuing paper back in the day, 2006, May 23rd, 2006. You had the Bank of China pushing out $11.1 billion. You had the Commercial Bank of China, $19 billion. You had the Russian IPO. That was the state-owned oil, which I believe they went ahead and they just simply went ahead and confiscated all of that property. Of course, if you take a look at where our markets were when that IPO came out, that was AOA Rosneft. That was a bottom inside our market, July of 2006. So you're sort of getting the picture out here that everybody, with regard to the hype that Alibaba is going to be going ahead and ring the bell at the top, they must not have done any of the work out there to go take a look and see if there really was any kind of correlation whatsoever. Now, true, AT&T was able to push out their paper nearly at a market top back in 2000, March 28, 2000 to be specific. That's about as close as you get to the market top as there is. Goldman Sachs, just a little bit later in May of 1999. Oh, I got that. How did I do that? Did I? Looks like I missed. Looks like I've got the. I've got the IPO for Goldman Sachs in the wrong place out here. How did Stevie? That must have been when it's right here. So I've got to move that. I don't want to give you bad information out here. No. There's the Goldman Sachs IPO. That most certainly was not at a market top out there. You can get the feel here. Take a look at in Japan. You get NTT Mobile. That was in October of 1998. No market top there. In fact, more like a bottom. In fact, you could come take a look at a lot of these IPOs, and what you'll see is more often than not, they mark significant bottoms in the market, not significant tops. So let's just simply say, let's go trade the market. Does that mean that the market doesn't sell off today? No, I can give you really plenty of reasons. In fact, I gave my newsletter subscribers all kinds of reasons why something, as I put it in the newsletter, something smells fishy out there. But do I think that this is going to be the one? What's the guy, Sanford and Sons? What's the name that he uses out there? Is this the one? What is that name? Somebody in the den knows out there. Well, my opinion of that is, we have to look at other charting patterns out there, other charting patterns that have called market tops. And those charting patterns that are more consistent. Let me switch over. Let me go ahead and pull up some of my my monthly charts out here, my weekly charts, really what I can put out here. If we go take a look at the monthly chart for the let's look at the New York Stock Exchange, as a matter of fact. Oh, that's the weekly chart. Let me put up the monthly chart of the New York Stock Exchange. See, there's other patterns out there way better than IPOs that call market tops. If you take a look here and you're watching this on TigerTV, here's the New York Stock Exchange. New York Stock Exchange, as it made its high in October of, made its high in October of 2007, had that beautiful price relative strength divergent pattern out there, followed up with a bearish reversal signal in the month of November. That had it all. That called the market top out there. Do we have that in place as we speak right now? We absolutely do not. We did have it in place It looked like it was going to be in place, and that was back in May of this year, but the market has blown through that area. Key level inside of the New York Stock Exchange is today, will be until it gets pierced, is 10,387.17. If we do see the market come back below that area, then we got a whole different story, but that's not because of Alibaba. It's not because of that IPO. It'll be because the New York Stock Exchange, which broke out of a very long-term consolidation pattern, 11 years to mark that consolidation pattern, will have had a false breakout. But as we speak right now, we are not there inside of the New York Stock Exchange, nor are we there in the Dow, nor are we there in the S&P 500, nor are we there in the composite. If we take a look at the Dow chart, let me put that up on my screen out here. We'll put up the Dow. And now the Dow does have the potential for that same price relative strength divergent pattern. It was the same thing that we saw back in 2000 as the market was making its highs, same thing that we saw back in 2007. So you've got it out here. Unfortunately, what you would need to see is one huge reversal in the month of September. That is likely not going to happen. It could happen in October, but we'll just simply have to take a look at this one day at a time, one moment at a time out there. And so I hope that I have put to rest the Alibaba ringing the bell at the top. It would be very unusual that is in fact the case. In fact, what I would say is, hey, any pullback, and I would think that we're going to get one here, any pullback, look for that as a buying opportunity, not that the top has been put into the market out there. Now, let's go take a look at a pattern out here. We're going to have to do that when we come back from the break. But if we take a look at a pattern, because we've had huge movement in the currency, let me do this here real quickly. If we take a look at your friend and mine, the Euro-Japanese yen, we want to pay attention to this, because this here today, in the way that the currency markets are fluctuating, if we see a close below, this is a daily chart, we're looking at 139.34 on it, and you're at 139.81 right now. You have a big, huge key reversal session. And that says that this currency will pull back, and it'll test its descending price channel that it broke out of. Probably find support down there. But we'll take this currency pair one step at a time. When we get back, we're going to take a look at the weekly chart for the U.S. dollar and Japanese yen. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Yeah, lots of movement inside the currencies out here. Hey, how about that euro, U.S. dollar, down 666? Ooh, that was a devilish tick that just popped up on my screen out here. This is the daily chart for the euro. Getting ready. Remember, we took a look at this here and noticed that it was just simply moving sideways with all these small-bodied candles working off a oversold condition out here. Well, looks like it has done that, and it's getting ready here to take out the lows from September the 17th. Well, we know as we took a look at the euro, I believe if I put this on the longer-term chart out here, let me put this on the weekly chart. Our price projection on this, our price target is still that 1.2752. That is where Uncle Ben Bernanke and his presses ought to be just hanging out. They're just hanging out, waiting to support it right at about that level. So we got a little bit of ways to go. Maybe that happens today. Maybe it happens Sunday evening, Monday. But at some point in time, it's that 1.2751 level that ought to act as a significant level of support. We'll see if it does. If it breaks down from there, we'll take a look at that when that occurs. Now, I'm going to go to my chart out here for the Japanese yen, for the U.S. dollar Japanese yen out here. And this happens to be a monthly chart that we're looking at. And if you're watching this on Tiger TV, you're going to see a lot of yellow lines going horizontally on my screen. Those yellow lines are what we affectionately here at TFN refer to as the primary trading range boundary lines. Now, the dashed lines specifically are the two largest areas of where we have co-located opens and closes. And we take a look at primary trading ranges. They are horizontal levels of support and or resistance. You get above one, it should act as support. As you're coming into one, it should act as resistance. This is a weekly chart right now. And as we take a look at the U.S. dollar Japanese yen currency pair, you're going to see that at 107.70, we're trading at 108.74 right now. At 107.70, that is one of the largest, if not the largest. It is the largest, by the way, primary trading range number. What you can also see is because price moves both in horizontal and diagonal levels of support and resistance. If we come all the way back to and this is a weekly chart that we're looking at, back into August of 1998, the red diagonal line coming across my screen out here, that is the price channel. So we can see that price has made its way above that. In fact, it did it last week. Let me blow this up on the screen, make it a little bit easier for you to go ahead and take a look at. We'll blow it up because we can always shrink things down out here. There we go. We've got it blown up here. Now, last week with a nice wide-ranging bar, and we noticed on the daily chart that this currency pair had broken out of its trend, and just as it had done before, and I'll just draw those numbers up on my screen right here. Here was the, if I can, I want to grab the right tool out here. Here's, come on, Steve-O. Here's when it had done it before, and here's where it had done it this time as well out here, and in both instances it led to nice big moves. Well, we've got that underway right now. What we're likely going to see out here, is either price pull back into the 107.70 level, and it can hold that area because it is now broken through a significant level of resistance out there. When you break, whether it's diagonal or horizontal levels, you'll typically come back, test it. If, in fact, we see the U.S. dollar, Japanese yen come back and test 107.70, this is a weekly chart, so that means next week, the week after, touches it and goes and heads off to the upside, well, then that says on a weekly basis you're going to see the next move up to 114.05 and then 120.41. Ideally, though, with regard to this currency pair, because we've got, in essence, a conjunction, an area conjunction here, where price has broken through diagonal resistance as well as horizontal resistance, ideally, you would see price come back, test that level, and then go ahead and make its way higher. And that would be the signal that the 120.41 level is its next target. And that is the longer-term chart. That's the longer-term analysis for the U.S. dollar, Japanese yen. If I switch over to a daily chart out here right now, the daily chart's going to show a fairly nice reversal. It's got the opportunity today to do one of really two things. Well, one of three things. Number one, it can just simply ignore what Stevie sees out here. Right now, I just got a doji candle. Hey, doji's at resistance. They mean a whole lot of things. They mean the market is tired out here. We got a lot of time left in the trading session. You get a key reversal session, though, if you were today to see any kind of move below 108.37 and any kind of a downtick out there. That is most certainly possible. Of course, closing out today's session at about 108.59 would give you a nice big shooting star out there. So we'll pay attention to the U.S. dollar, Japanese yen. We'll pay attention to it next week for sure. 877-927-6648. Hey, during this break, go on. Do yourself a favor. Go sign up for our virtual trading competition. You will be so happy that you did it. This is Steve Rhodes. This is TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow 72 points. They're got 17,337. S&P's up 8, trading at 2019. Composite up 14 at 4607. Russell 2000 up $2.80. She's trading at 1162. DAX up 27. FTSE up 41. Gold back 4. Silver down 14 pennies. Platinum off $4 out here. Light sweet crude off 42 cents. She's trading out at $92.65. To the upside, leading the charge, Concours Technologies up 18%, up 19 buckaroonies with 3 million shares already traded here. What's the deal here? Concours Technologies alert under investigation. The investigation in connection with the proposed sale for the company out there. That's the kind of investigation you want. How about the Dresser Rand Group? That's up 11%, 12%, up to $8.47. Siemens plans to buy them for $80. Hey, a lot of that cool, hard cash being put to work in the marketplace. Priceline up 0.5%, up $6. Google up 3. Rockwell Collins, COL's a ticker symbol. That's up a couple of dollars out here. What is Rockwell Collins doing? Oh, an additional $500 million for share repurchases out there. So the repurchasing of stock is alive and well and kicking out here. We got Golar LNG. That's up 2.5% this morning. Baidu up a couple of bucks out there. Vertex Pharmaceuticals up $1. Air Products Chemicals, we took a look at them yesterday. They had a huge day yesterday putting some air, but they weren't able to take out their swing point. They had big volume. Were not able to take out their swing point. Well, that was for the week. Maybe for the, they didn't take it out for the week. They didn't take it out for the day either out there. And that was Air Products. To the downside, Hey, our friends at Carbo Ceramics, they're off 7% this morning, trading down $6.78 out here. Let's go see what they're doing. Gapping down a pretty decent volume so far, 240,000 shares. It's had a high volume low, had some air come out of its tanks. Carbo Ceramics, that was on August the 5th. Big volume to the downside, 3.3 million shares. Let's go see where Carbo Ceramics is headed to out here. Well, it's already back below one of its breakouts. Next time we see any kind of volume in this equity, it'll take us down to about the price level. Well, you'd have to say it really comes back to the swing point in June of 2013, likely headed to $62. Let me put this on a weekly basis. Maybe the picture is a bit clearer. How about that? Clearer. Oh, clearer for Carbo Ceramics. Why do I say that? Well, because its swing point is, June of 2013. That's where looks like where she's headed. 62.11 is 67.95. You're at 87 buckaroonies right now. CRR is the ticker symbol. Tesla's off $5. Tesla, let's go take a look at it. It's down 2% out here. Let's take a look at let's got the weekly chart, but let's go ahead and clean it up out here. Let's do that. Let's get rid of this. If we can get rid of that, get rid of this. Come on, there we go. Get rid of that out there. Okay, because I don't even know what that was. I was probably off of a different chart. Now, in the case of Tesla, giving you a pretty significant from a weekly standpoint, a pretty significant bearish pattern out here. But what Tesla's not doing is, big, huge volume back here on February 24th. That's probably where that line was drawn. On the weekly chart, we'll just simply draw it up at the top. It's below that area, and that had 98 million shares to the downside. You're pulling back into that with 34 million shares for the week. So in essence, it doesn't look too shabby. Let me put this on the daily chart out here. Daily chart shows there's that 265 level. Okay, so that's what that line was all about. Let me get rid of this here. In the case of Tesla, still that big wide price spread day of 32 million shares, the upside back in February 2014. Just really pulling back. I don't think the SEX is totally out of Tesla TSLA, not at this stage here. You got SAPAG. I think that was one of the one they're looking for they're buying out Concord. Let's take a look at Red Hat. RHT is the ticker symbol. Now, back in the 2005, 4, 5, 6 time frame, I used to trade Red Hat quite a bit. This was actually one of the stocks that led me into wanting to understand technical analysis, especially volume. I actually got it because this is one of those stocks that back in those days could fall out of bed. In fact, did fall out of bed and gave me the kind of haircut that I didn't like. It was what they call a crew cut. That took me back to the old days. I don't even think I liked a crew cut when I was a young chap out here. Nonetheless, we got Red Hat this morning here, gapping down. Volume behind them was 686,000 shares. Now, it's got a sign of strength. The level where it's going to likely move to and test, we'll see if it holds as support, is your trading session with wide price spread, accelerated volume. That's from June 19th, 7.3 million shares out there. That price level is anywhere between $54.02 and 53. Well, it's not really 53.10. It's more likely 53.22 is the number. I just drew it in the wrong spot out there. And that should become a level of support for Red Hat, RHT. Of course, let me take a look at this a little bit deeper by going into a weekly chart. Let's go see what Red Hat here has done or has been doing. Oh, how about this? Nothing more than a little consolidation pattern out here. Red Hat... too funny. Red Hat made it all the way back to its swing point. This is the weekly chart, April 16, 2012. 10 million shares up there at 62.75. And that was hit with light volume, 6.7 million shares. That area was rejected. So Red Hat, it's got some support back at that swing point. The weekly chart is December of 2013, 25 million shares, the bottom of which is 46.70. So it's a 46.70 on the weekly to the 47.45 area that we will likely see Red Hat pull back to RHT. You got Netflix moving to the downside, but how about this one here? ESI, ITT Education Services, looks like they failed the grade out here, down $22 as we speak. Looks like these guys are getting expelled from school, trading out at $6. Is there anybody inside this equity that is in a winning position out here? Let's go find out. If there's any winners inside of ITT Educational Services. Well, the answer will be probably we'll find out today. The low in this equity is $5.38. You're at $5.96. So only just a very few people, if they actually held on this since 2000, and I doubt that that is the case out there, could potentially be in the winning column when it comes to this trade out here. That's a weekly chart. Failing to grade miserably. That is ITT Education Services. That was the weekly chart we were looking at. You got St. Joe Company, JOE is the ticker symbol. Let's do that in honor of all those folks out there that have their morning Joe out here. And I am not one of those. Not a coffee drinker. Not that I don't not. Give me a good coffee ice cream or good coffee candy like Sanders, as I used to say, living in Detroit. There's nothing like the hard coffee candies that those folks put together. I used to travel like our man John Logan does. I used to travel all over the world out there. And you know how you should have some gum or chew on a candy. You know, if you have any problems with your ears out there. I do remember taking some of those, and I don't sleep well on planes anyway, so almost not at all. I always slept on planes either when I was just taking off or when I was just landing. Now, when you're falling asleep, maybe you're like this too. You ever just fall asleep just before you're landing, and all of a sudden, you know, thump, you hit that ground. You know, scares the. Do you know what it scares out of you? And then when you take off, of course, you're just taking off. Then you got the flight attendants, you know, that are interrupting you, or you hear them interrupting somebody else next to you. In any event, you don't want to hear about those stories. But let's take a look at JOE, St. Joe and Company out here, gapping down this morning. This thing is probably, and this is a daily chart we're looking at. So this thing had some volume. Yeah, it had a big volume day, but it wasn't really volume off the top or anything. That was back on June 27th. Nonetheless, if we take a look at the retracement underway so far inside of Joe, we'll see that, well, of course, it did have a big shooting star out here at its highs on the daily chart. Right now, it's trading at about the 0.786 level. 1956 is the number. That's your 0.786 retracement. But gapping down into that area, that's never a good thing. So I would have to say that is not a good thing for this equity as well, and it probably gets back into the swing points. You got a little hammer back here, back in February of 2014. Likely will find support around that 1730, 1793 level out here. I'm going to go ahead and put the ES Mini on my screen out here for a moment. We're going to take a look at the 120-minute chart. I think the trade becomes relatively easy. Well, I know that it becomes relatively easy. And we're going to take a look at a couple of different tools out here. Now, number one, if you come off of the low out here inside of the ES Mini, it takes us back to 2000 hours, and that is on September the 14th. You can see how it's made this nice move up. And if we go take a look at the Chapman wave counts out here, we'll see that this morning at 2 a.m., this is a 2-hour chart that we're looking at. It made that infamous 7th wave out there, and that says at any close above that high, 2014.50, that means even if it gets to 2014.75, you'd be wrong on the short trade out here. So that is what you want to be watching today. You take that out. You know, then you're going to see higher prices to where, I don't know, we could take a look at A to B equals CD patterns. Let's go ahead and do that out here. Let's go draw that in. Your 8-point's going to be the low that we're using back here, and that's at 2000 hours on September 14th. And you got to, I just say you just have to, use as your B point and C point the same candle session. And that's the one that when Janet Yellen was out there speaking. So if you see any type of move above the level here, whoops, come on, don't do that to me. If you see any move above, it's going to do it again. It's going to test me one more time. It's testing my patience. Any close above 2014.50, next move up is 2018.50. That would be your 1-to-1 A to B equals C to the upside. Could even get up to 2028. But of all of the chart patterns on the 120 minutes, now there's no price, relative strength divergent pattern. You're not below a market profile. You're not even below a market profile resistance level, which is a 2006 out there. But this is certainly a chart worth noting, worth paying attention to. And that is on the S&P futures. Perhaps nothing really does happen much until, you know, the Alibaba IPO. Let me just check over here, see if that's out. Is it out yet? No, not trading as we speak right now. But as I said in the opener, it's an IPO, but folks, it's not, IPOs rarely, and I mean rarely, do IPOs of this type of magnitude call the market tops. And if you didn't catch the opening, go watch the archive of this show out there, because I took the top 15. I could have gone back even further. I just got tired. I mean, it had proved the point to me. If there's a market top, it's because they happens to be a 3 Pesavento index state. I would give that more credibility than I would the mere fact that the Alibaba has come out or is coming out with their IPO. That is not what is going to call the market top out here. And in any event, so that's my call. That's what I think, and I give you my undivided attention and an extraordinary amount of research that is put in, or because if all we did was we just listened to the news out there without doing the work on our own, where that leads you to. It usually doesn't lead you to very good things out here. Let's go check out Goldilocks and silver. Gold back up $5 right now. Does not look like the bottom is in yet inside of Goldilocks. Looks more like she wants to get down, push down into the 1198.40 level. Of course, I am very interested in seeing what the commercial traders and the CFTC commitment of traders data has to say. But again, their data is as a Tuesday evening, but they have, over the course of the last several weeks, they have been exiting their short positions that they have had, their net short positions that they have had. Of course, they've had net short positions almost since those records were kept. And so you are evaluating their position as a factor of their net short position here. And what they've been doing over the course of the last several weeks is they have been exiting that as if they are expecting to see gold make a bottom. And that's what I expect. That's what most of us here at TFNN expect, and you should expect that too. And we want to catch that bottom at the bottom. Boy, is that just terrible grammar or what? We want to try to get it as close to the bottom as we can out there, but we don't want to step in front of that freight train a bit too early. Now, how about silver here? Trading out at $18.35 out here. I think I got to go over to the continuous contract, so I'm going to go ahead and do that out here. Give me a moment to do that. SI #F equals 1 out there. And if we take a look at that, I got to pull that back even further out here. And so the number that we're watching for, let me put this line across the chart out here. One of the levels that we're looking for is out at that, wow, that's weird, is out at $18.18 out there. Oops, why did it say 23? Oh, there we go, 18.18. It does say that. Okay. So 18.18 is the number that we want to be watching. So far, what we saw yesterday got down to $18.27. It was close, but no cigar. Now, can it get lower than that? Yeah, absolutely. You can come up with a number of different A to B equals CD patterns to the downside out here. We had 44,000 contracts that traded back on May 30th. Was that the low? Let me expand this up here. Yeah, you had 44,000 contracts, and that was passed out here with 33. So with light volume, that's good. But 59,000 contracts on September the 12th, so not necessarily so good out there. But we'll watch for that area. 1818 is the number. Right now, we got the Dow up 67, S&P up 7, composite of 12. Steve Rhodes, TFNN. Hope you're right.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Dow's up 74, S&P is up 7. And don't forget, please get over to the homepage of TFNN.com. Sign up for our virtual trading competition that's going to expire on Thursday, September 25th at 12 noon. And it is at 12 noon out there. So don't delay. You've got extraordinary bonuses, most of which is you get to join an extraordinary peer group of tigers and tigresses. That means you give access to free use of the Tiger's Den out there. You can see our charts in HD. So many great things about the Tiger's Den. And, of course, on September 25th, Tom O'Brien that Thursday evening is going to be doing a 1-hour workshop, so you get the benefit of that. We've got 70 total prizes out there. You've got 5 daily random winners. Just a beautiful thing. So please go on over to the homepage of TFNN.com and sign up for that. Now, just to kind of set the day here, one of the interesting things that I'm noticing, that I'm paying attention to, is this. Because if ever there was a confirmation or lack of confirmation inside of the Dow, it's going to end up being this chart here, the general. Now, GE, which is less than 1% of the total weighting structure inside of the Dow out here, number 29 out of 30. What GE has been doing, it has been pushing and pushing and pushing into a swing point with volume. That swing point is August the 21st, 22 million shares, the high of which is 26.45. When I say pushing, it was pushing on September 17th with 29 million shares. It pushed yesterday with 32 million shares. It's pushing today. We've done 12 million shares. We've only been trading for 26 minutes out here, and that's That's going into 12 million shares. It has not tested the high of which is 26.45. The actual high so far we've gotten to is 26.40. That was on September 17th. If you see GE close above 26.45, it's got the volume today. So if you see it close above it, in fact, we'll take a look at the weekly chart. What that will do is that will set up an A to B equals CD to the upside, Pat, up to the upside. And what that will actually suggest is that'll suggest and confirm the move higher that we are seeing at this moment inside of the Dow. I would say that 27.45 would be the 1-to-1 A to B equals CD. That takes you all the way back into the swing point here from June the 9th out there. And that, if you are a bull, that's what you want to see. If you're a bear, you want to see that level fail. In fact, you'd like to see price get back inside that descending price channel. But let's go take a look and see what the weekly chart. It's been pushing on a daily. It's been pushing that string on a weekly. Come on, baby. Populate for me out here. Let's go see if it's been pushing that on a weekly basis out here. You had 116 million shares the week ended August 18th out here, and this week 116 million shares. So the answer there is yes. It's been pushing that swing point on a weekly basis as well out here. If you get above that, that would be very positive. That would be very bullish for the market. One of the things that almost certainly is bullish as we speak right now, that is the VIX index. The VIX index trading at 1159. That 50-day exponential moving average, that line of demarcation that the bears want to see the VIX cross, is $12.75 out there. No cross above that line. What does that mean? That means plenty of liquidity inside of the marketplace. You do not want to be long, or you do not want to be short a market when the VIX is trading below that number out here. Oops, I didn't mean to do that. And, of course, if I go back in and just check on that currency pair, your friend and mine, the Euro-Japanese yen, let's go see what it is doing. Just kind of stabilized here as we speak at the moment. So, folks, stay tuned. Have a fantastic Friday. Our man, Daryl Martin, along with Tom O'Brien, doing the Nadex Hour for you. Have a great Friday, a great weekend. I look forward to seeing you real soon. Take care now.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.